In this tutorial, I'll be going through with you a stock called Humana. Just type that in Google and click enter, and you'll get this information. And you can see the name here, Humana Inc. And it's HUM is the Nasdaq symbol. It's 298.22 US dollars for one stock, and it's a billion size firm, which means it's a big size firm, and it's paying dividend. And I just want to point out about dividend. Any company that's paying dividend, that means they're financially very strong, because after paying their costs, liabilities, and creditors, still have money left. That extra money pays to shareholders as dividends. So don't worry about even if the dividend yield is less than 1%. That is a positive news. It's not a weakness. It's a strength of the firm, because that percentage is the extra money of the firm. So that's financial strength is brilliant. Now let's go and see when was this founded. I'll just go to Wikipedia, find this box, and you can see it's 1961, 57 years ago. And I want to see what the employees think about this. I'll just copy this exactly from Google. I'll paste it here, type Indeed review, and let's have a look. I'll click the first one, and I can see it's 5,500 reviews and it's 3.7 star. That's brilliant. Read through the reviews yourself and check out the salaries, the photos, jobs listed, the question and answers. And let's have a look at the Glassdoor reviews as well. And let's have a look. And I can see 3,300 reviews. It's 3.4 star. Read through the reviews yourself. Check out the jobs listed, the salaries they're paying, the interview questions, the benefits they're giving, and the photos. Let's have a look at Justia Patents, and I want to see the patents this firm has. I'll just paste in the search bar and click enter, and I'll just make sure that have a look at applicant or assignee, because these are people who have the full rights of the patents. So the brilliant news is that they have patents in 2013, 12, and a lot in 12 and 13, and in 14 as well, 16, which is a recent patent. That's brilliant. So that means they're still innovating. 2017, that's brilliant. So please look for recent patents as well, because that means that the firm is still innovating. Check out for patents in 2015, 16, 17, 18. So that means they're still innovating. That's a positive news. And check the other pages as well. And any firm that has patent, that means that they are very strong in the market. It's difficult to beat that firm because they're innovating. So it's a very positive sign. So go through the patents yourself. That's brilliant. Now let's go to Yahoo Finance, and I want to show you the key executives and their salaries. So I'll just paste this exactly that I got from Google. Click on HUM, that's the symbol in Nasdaq. Click profile, and let's see the sector, industry, and the employees. And the best part is that they have 5 key executives, and all of their salaries have been shown. So it's very transparent in terms of salaries they're giving to key executives. That's positive news. So we can see all the salaries. So the more transparency in a firm, the more information they give about their firm, the more trust we're able to build. So that's brilliant. Let's go to macro trend and see the ratios. Click price ratio, price book ratio, type in the symbol HUM. And I just want to point out that if the price book ratio is less than 1, that means stock is cheap, it's undervalued, it's a sale. If it's more than 1, that means stock is expensive. And the higher the number goes, the more expensive it gets. So let's have a look. Sometimes this website takes a little bit time to load because it has a lot of data, so be patient with it. Okay, so I can see that in 2019 August, it's 3.36, so which means that the stock recently, if somebody buys right now, they will be paying 3.3 times more money. It's 3.3 times more expensive. If I see in 2018 September, the stock was 4.38 times expensive. which meant that somebody who bought in 2018 September, they paid $337 to buy something that was $77 worth. They bought it 4.3 times more expensive. If somebody bought in 2009 March, they paid, they got it, I would say um, nearly 12% cheap. It was a 12% discount in 2009 March because they paid $24 to buy something that was $27 worth, and right now it's 3.36 times more expensive. Let's go to other ratios. I want to have a look at current ratio. If current ratio is less than 1, that means stock is very risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means that the stock is safe. It has a very good margin of safety. So please look for 1.5 or more than that. Let's have a look. I can see that recently we have data up till June, so 2019, so it's more than 1.5, so it's a safe stock. So that's brilliant. Let's look at the previous trend. Has it ever been below 1.5? Yes, it has, but just once, that's fine. And then it has been more than 1.5, and then consistently it is more than 1.5, I guess. So just once or twice in between it's less than 1.5, but a little bit less. It's not much less, so it's fine. That's fine. But I would say that since 2008, consistently it has been above 1.5, so it's a very safe stock. Just once or twice it's below 1.5, that's fine, but consistently it's above 1.5, so it's a safe stock according to current ratio. Let's look at debt equity ratio. This ratio will tell me if the company is mainly operating on debt or equity. So I'm looking for zero point 0.5 or less than that for it to be safe and have a good margin of safety. Let's have a look. Okay, so I can see that in 2019 June it's 0.37, so it's less than zero point 0.5. That's brilliant. Let's look at the previous trend. Has it ever been above zero point 0.5? That's my question. So let's have a look. That's brilliant. So since 2005 March up till now, since we have the data, consistently it has been below zero point 0.5, so it is a very safe stock in terms of long debt. That's brilliant. Let's go to return on equity. I'm looking for 8% or more than that for it to be very good. Let's have a look. I can see that the return on equity is more than 8%. That's brilliant. Let's look at the previous trend. Has it ever been below 8%? Yes. In 2016, just once it has been below 8%. So I would say that consistently since 2005 up till now, it has always been 8% or more than that, except once. So that's fine. Once is fine, but at least it's a positive equity. That's fine. But consistently, it has been giving a very good return on equity. That's brilliant.